Hi, this is Zach Meir with the Bulletin Board Heroes here at Vox Markets for Friday, the 13th of January. Unlucky for some. Starting off with the FTSE 100, where there's plenty of good luck for the bulls in the recent past. We had that big breakout through 76.30. That was basically post-April resistance for this market, post-February in fact. So recovered the losses after Ukraine and all the other disasters that we've had last year. Above 76.30, we were looking for as high as 8,000 by the end of next month. Obviously, the way things are going, it looks as though we might even get 8,000 by the end of this month. And clearly that would be a massive event for the London market, given that we've been stuck really between 7,000 and the upper 7,000s for the best part of 20 years. So don't want to tempt fate, but the big breakout could finally be upon us. Below 76.30, the risk of 75.50, which was late December resistance. And then below that, you've got the 50-day moving average and the floor of that rising trend channel from October, currently around 74.70. So 74.70, 75.50, and the big 76.30 broken resistance area. Just looking at the RSI oscillator, we had a little break of, we had a bearish divergence initially, but then we've broken that line of resistance there from the beginning of December. So that's a mini continuation signal in its own right. MACD also gave us a buy earlier this month, and the lines there open on the buy side. On to the DAX, and here you can see that this market also trying to get up to the top of its channel, which in this case is around 15,500. Basically on the way down from earlier in the year, there's old March resistance there just below 15,000. So might be a bit of consolidation around the 15,000 level, but at least while we're above 14,700, looking for 15,500 relatively cleanly. RSI overbought, but not overly so. But the other thing to note, I suppose, is the way that even though we've gone higher for January, the RSI hasn't gone as high as it did back in November. So that might be a slight divergence signal. Worst case scenario at the moment is a return back to the 50-day moving average area at 14,300, but hopefully we are up and away on the DAX. On to the Dow, and here good progress after breaking sort of the second time lucky, after breaking the 33,500 resistance area, the late December resistance area, neckline resistance, and final bounce near the 50-day moving average at 33,400. Obviously looking for a retest of December resistance around 34,600, and the big target here up to 36,000 by the end of next month, if we can keep building on the breakout. Below the 50-day line, the risk of a move down to 32,800, but that seems quite a long way away now. Good news here is that the RSI is early in the low 60s, so not too overbought even after the recent recovery. What I'd like to see, though, is the 200-day line, which is currently falling, starting to go flat or starting to rise, obviously, and that would make this chart look all the more appealing. On to Bitcoin, where there are hopes that 2023 could be a better year for this particular market and the cryptos in general, after all the horrors that we had last year, with providers going bust, etc., or getting closed down. Here we've hit the top of that rising trend channel from November. We've got a bit more on the upside, hopefully, with the 200-day line there at 19,500. And that's the key level here. That's a bit like 8,000 on the FTSE, in the sense that in a bear market, the 200-day line is the top of the market, as we had in March, April. And if we can get through that and then build a higher low there, then that would really build up confidence for the longs. Best case scenario, that if we can get through the 200-day line, would be actually a move up to the top of that triangle that I've just drawn there from June up to 30,000, which really would be a rather better look for the cryptos and Bitcoin in particular, of course, over the near term. But at the moment, the battle is to get through 19,500 and the 200-day moving average. Onto the stocks, and Argo blockchain, obviously very much related to the crypto situation as it's a crypto miner. Here we've managed to have our recovery, got through the 50-day moving average, and the reason for including the shares today is that yesterday's close above that gap there at 10.1 pence was a gap close buy signal. So hopefully there might be some further momentum, at least to give us a retest of recent highs around 17.5 pence. You can see that the market's just dithering on that August resistance line. This stage only well below 9 pence, really cancelling the idea of a recovery here. And this was a bear trap gap reversal. So pretty strong turnaround signal there with a gap down and then the gap higher during the course of December. Next stock is Asimilar, which also seems to be ready to come back from the dead. We've had a couple of days of decent price action here. Neckline broken there at 2.25 pence. Above that, we're looking to fill the gap there up to the top of the December gap there at just under 4 pence. So that would be a reasonable upside from current levels. Only back below 2.25, really upsetting the idea of recovery. Another gap close buy signal, I think, in the wings here. In fact, it's just a gap higher with Cornerstone. We had a couple of gaps to the upside. So bear trap gap reversal there in December, and then another unfilled gap to the upside through the 50-day moving average. For this month, we've got the 50-day line rising. We've broken a trend line as well. We had bullish divergence, so we should be on for a target there around 11 pence by the end of next month, and hopefully sooner, obviously. And really the combination of those two unfilled gaps to the upside in the bear trap making this chart look very strong indeed. Next contender is Hemogenics, where unlike previous occasions, the shares have actually not only reversed in a positive way, but actually gone up rather higher than we were expecting. First, we were looking for 1.8. Then we were looking for 2.1, and finally we thought 2.75 would be the highest that the shares would go to, but they've blown the lights out on all fronts, and all we can look now to is the support on the way down, which was around 5.5 pence, and that could be hit as while we're above the old target there around 2.75, so above 2.75. Going up to 5.5, hopefully by the end of next month. But this looks like an extended U-shaped reversal for Hemo, and quite a change there. A great change, in fact, for the stock. IQAI is next, and here you can see another decent turnaround. One of our favourite setups, the bullish divergence there with the lower low there for January, but higher RSI trace. And then the best aspect was the unfilled gap to the upside, which we had basically earlier in the week, and we've never gone below the top of that gap. Also already gone through the 200-day moving average, so an end-of-day close above 2.9 pence, and we're looking for a target here, a June resistance line projection as high as 5 pence by the end of next month. Only back below the resistance on the way down, around 2.6 pence, really delaying the upside scenario in what looks like a pretty decent reversal there. Moving along to light science, and here you can see another U-shaped reversal after the real push down towards the 3.5 pence area that we had last month. Got a gap close buy signal with the end of day close yesterday at 4.25 pence. Above that, looking for resistance on the way down as high as 6.4 pence by the end of next month. So let's see if that gap close signal delivers the goods for light science. On to Ocio, which has managed to revive itself after the bear trap that we had basically to start this month, or at least last week. The old lows here around 2.3 pence, so above 2.3, the August support. Looking for the shares to get back towards the 200-day moving average, initially at 3.5 pence, and then retesting September resistance around 4.25, 5 pence. The best by the end of next month that we can see there. If you're cautious, you just wait for a proper weekly close above the 50-day moving average in that broken trend line around 2.6 pence over the next session or two. On to Overker, which is looking better as well at the moment. Here we've got a situation where the shares have managed to break through the 50-day moving average. There's been bullish divergence there going into December with that spike low that we had, so that's a plus. Current situation is that an end-of-day close or remaining above the 6.25 pence area should at least get us a retest of November resistance around 7.75 and then up to 9 pence maybe by the end of next month on a conservative basis. If you're a fan of the shares and want to see greater glory, then August resistance line projection there at 12 pence is the target over the next 1 to 2 months. But ideally we stay above the 50-day line around 5.9 pence in the meantime. On to Ormond, which is rehabilitating itself at the moment. Finally broken that trend line there, which has been bugging the shares for a few months. Just see how long it was back in January last year. Above the 50-day line here around 0.66, we're looking for an easy move towards the 1 pence area, which is basically last year's resistance for the shares. Prospex is next, and here you can see that the overall picture here remains the same as it has for quite some months now. We've got a rising trend channel there from July. Floor of that channel currently around 14 pence, and really while we're above that, looking for the top of the channel there as high as 22 pence. Might have to retest old resistance at 12 pence as new support at some point, but certainly while we're above the 50-day line and above 12 pence, looking bullish. And if the shares are lucky, they will remain above 14 pence ahead of a 22 pence target by the end of next month, or that kind of time frame. Requested stock is next, Synegia. Here we had the shares flash it back into life. We had a bear trap, a rebound from below the old 0.06 pence support from last month, and we've easily broken the 50-day moving average at 0.08. Above the 50-day line, we're looking for a return towards the 200-day moving average, and that at the top of that triangle from September as high as 0.14 pence, and maybe we could see that by the end of next month. Extended bullish divergence line as well, which may explain why yesterday's move was so strong. Finishing off with the Twitterati's favourite, Thor expirations, and here we've had an unfilled gap to the upside off the December low and off the floor of that channel there from February last year. At least while we're above the 50-day moving average at 16.25, looking for the shares to hit the top of that rising trend channel from the beginning of last year at 22 pence, and ideally that would happen by the end of next month. But those unfilled gaps to the upside, the ones that we had back in October and December, giving the chart a bit of a positive spin. That's it from me today. More updates over the weekend.